As the calendar year draws to a close, every dollar your business spends before December 31st can make a significant difference in your bottom line. This is not just about spending for the sake of it, but about strategic tax planning. At ARI, this approach is called closing the year with purpose. Year-end tax planning is about being intentional, ensuring every expense, purchase, and payment supports your business goals and compliance. Not every expense qualifies as a business deduction. The Internal Revenue Service, or IRS, requires that deductions must be ordinary and necessary for your trade or business. This means expenses should be helpful and appropriate, even if not absolutely indispensable. Common examples include rent, utilities, office supplies, payroll, contractor payments, equipment, software, business subscriptions, marketing, professional services, insurance, and travel directly related to business. For items that blend personal and business use, such as cell phones or vehicles, only the business portion is deductible. Keep detailed records to substantiate your claims. If your business uses cash basis accounting, timing is everything. Accelerate deductions by paying bills before year-end or defer income by delaying invoicing until January. For example, pay January rent or utilities in December, prepay vendor retainers, or order necessary supplies before the year ends. This strategy can help smooth taxable income across years, especially if you anticipate higher profits next year. However, avoid manipulating timing too aggressively, as this can attract IRS scrutiny. Always document the business purpose for each transaction. If you have invested in equipment, software, or vehicles, Section 179 may allow you to deduct the full purchase price upfront, up to $1,220,000 for 2025, with a phase-out beyond $3 million in purchases. Bonus depreciation can also apply to new or used assets placed in service by year-end. Qualifying assets include computers, furniture, machinery, and certain business vehicles. Work closely with your accountant to ensure assets are operational before December 31st. Now is the time to confirm all W-2 and 1099 details. Mismatched names or missing taxpayer identification numbers, or TINs, can cause fines and delays. Ensure all employee information matches due for forms, and every contractor earning $600 or more has a valid BU name on file. If you plan to issue year-end bonuses, finalize them early for timely payroll processing and deduction. If you use part of your home exclusively for business, you can deduct a portion of rent, mortgage interest, property taxes, utilities, and internet. The simplified method allows $5 per square foot, up to 300 square feet. For vehicles, track mileage carefully. The 2025 standard mileage rate is 67 cents per mile. Use apps to document business trips accurately. Retirement contributions are often overlooked, but can be powerful deductions. Whether you use a SEP IRA, simple IRA, or solo 401k, contributions are deductible and build your personal savings. Remember, setting up the plan may need to happen before December 31st, even if contributions can be made later. Employer-paid health insurance, health savings account contributions, and fringe benefits also reduce taxable income. If you operate as an S corporation or partnership, deductions reduce the owner's taxable income. Consider the impact on your qualified business income, or QBI deduction, which may allow up to 20% of pass-through income to be deducted. Also, review your state's tax incentives and ensure allocations are accurate to avoid double taxation. Before your certified public accountant or CPA asks, reconcile your bank accounts, credit cards, and loans. Clear out personal expenses accidentally charged to the business and ensure every transaction has a category and receipt. Proper documentation is your safety net in case of an IRS audit. With proactive planning and expert guidance, you can close the year with confidence and compliance. For more tips and to stay informed, please consider following our YouTube channel. Feedback is very important to us. Leave us a like, comment, or a share if you found this video helpful, and we will see you in the next video.